Graff Diamonds is the retailer of some of the world's most expensive jewellery. The company is thought to be considering an IPO on the Hong Kong market. The move could value the company at around $5 billion, and it would hope to raise about $1 billion in equity. In this week's View from the Top, I spoke to the company's chief executive, Francois Graff, and I started by asking him about where demand is coming from for high-end luxury diamonds.
Well, clearly Asia is experiencing tremendous growth. We have stores all over the world. We're a global, truly global, vertically integrated business. We have 34 outlets spread quite evenly between the United States, Europe and Asia. We started in Asia in 2007 was the first store opening, and we've seen incredible growth through that period in Asia. Last year we experienced triple-digit growth in our Asian stores.
What about the weaker markets? Are we seeing a slowing of demand in Western Europe?
Well, we've seen growth throughout the three geographical regions. In fact, Europe was equally successful as the growth in Asia over the last year.
Demand for diamonds may grow at double the pace of supply this decade because of the expanding middle classes in China and India, and that's according to a recent report by Bain. How much of an issue is supply outpacing demand?
Well, it's a tremendous issue in the sense that growth of supply is at about 3%, and growth in demand at the moment is in excess of 6%. So there is a big differential, and whenever there is a supply-demand imbalance such as that, prices will tend to trend up.
Now, the Bain report didn't give price forecasts. Just how high do you think the diamond price could go?
Well, I hate to make predictions, but you can extrapolate, I think, from that increasing gap where diamond prices are heading. And one has to take a very long-term view, and I think prices will substantially increase over the next decade.
Now, we've seen new diamond mines in Russia and Canada open in recent times. What do you think those mines will do to the diamond market and to the perceived worth of stones?
I don't really believe that there will be a glut of supply. There's no indication that there'll be a substantial increase in supply, but what is guaranteed is that the growth of wealth around the world, particularly in the ultra-high net worth category, both the pool of wealth itself and the participants are growing at an annual rate of over 10%. I think that imbalance will continue long term.
Now, Tiffany's recently announced an unexpected slowdown in sales in Europe, the US and Asia, notably in Asia. Do you think that Asian consumers, wealthy Asian consumers, will continue to spend money on luxury items like diamonds if their own economies start to slow down?
Well, I think in the context of our business, Graff Diamonds, it's very important to understand that we are operating at the pinnacle of the luxury goods, diamonds and jewellery business. And the consumers that we attract are extremely insulated to the general gyrations of the world economy and the Chinese economy. We operate at a level where our average price points are completely different to Tiffany's, and that insulation allows those consumers to continue their purchases.
Are diamonds becoming increasingly more attractive, do you think, as the pool of less risky assets diminishes?
Well, over the last 5 years, we've seen a very well-defined trend towards alternative asset classes. Diamonds have gained traction as the proposition of an investment in diamonds has really gained a lot of ground. They are perceived more and more as a store of wealth, an important store of wealth. And certainly for Asian consumers who have a cultural heritage of buying diamonds and gold, that's even more pronounced. So much the same as we've seen in the classic car market, fine wines, fine art, a tremendous growth and price appreciation. So we've seen the same in diamonds.
Let's move on to the issue of conflict diamonds and the Kimberley process, which the US has recently taken over in order to try and restore some of its credibility after we saw one of its founders, Global Witness, the civil society group, withdraw. What's your view on the Kimberley process? Has it failed?
Well, I don't think it has failed, and we ensure that every diamond that comes into our procurement division goes through the certification process. It's very important for many reasons. Clearly, we don't want to support these regions. I think that the general feeling amongst consumers is that they would only buy from a company that really ensures that their supply goes through that Kimberley certification process, which we do.
And just finally, when you look back over your career, what's been the most difficult business decision that you've had to take?
Well, I think probably the most difficult decision was a very basic decision, and that was whether or not to sell a very rare blue diamond. At the very beginning of my career, I was traveling in Asia, funny enough, in the late 80s. I had an extremely rare round blue diamond at the time. And I realized that these stones at the early part of my career were difficult to replace. And I remember calling head office, speaking to my father, and very excitedly telling him that I'd sold this blue diamond for $500,000, which was, at that time, a substantial sum of money. And he turned around, said to me, "That's the worst decision you've ever made in your life." And only today do I really understand, because that same stone is worth many, many millions. It would have been better not to have sold it.
So Francois, are you ready to play long short?
Absolutely.
The Arab Spring.
Long.
Gold.
Long.
Platinum.
Long.
Palladium.
Long.
The renminbi.
Long.
Technocratic governments.
Short.
The Glencoe-Xstrata merger.
Long.
A two-speed euro.
Short.
A second term for Obama.
Long.
And finally, De Beers.
Long.
Francois Graff, thank you very much.
Thank you.